May profits be upon you. Welcome to another weekly Forex forecast. We're looking at pound USD, and this is one of the good ones. Okay, let me show you what I mean. Looking at the monthly time frame, let's break it down. All right, was it? Can you look at this chart and say, are we bullish or bearish? What say you? Leave a comment in the comment section. I'm telling you we're bearish on the monthly time frame. Why? Because the last break of market structure is here. This is the high, this is the low. All right. And when you have a break of market structure, you are bearish. All right. In this scenario, it's the opposite of what the bullish scenario, but this is the bearish scenario. So uh uh when price starts to pull back up, we are now in retracement. Just think lower low, lower high, lower low, lower high, lower low. That is a downtrend, right? This is the impulsive move. This is the corrective move. Impulsive move, corrective move, impulse, correction. Got it? Good. All right. Now, how do we know if the retracement is over? Well, you see a bearish, uh, uh, you see another bearish uh, break of market structure, but it'll be an internal one because this is the high and low of this bearish leg. Once we break this high, we are bullish. Once we uh, 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 retrace and we see a bearish break of market structure, then we can say, oh, well, the retracement is over and we're resuming the overall trend down. Okay. That's not what happened here. Look at this. I need you to learn this part because this is the fractal nature of the market. All right. This is not a break of market structure. Got it? This is a liquidity grab. This is just to take out the lows. The people who have stop losses here, who took longs, that's the only purpose for this wick to wick past that low, still take people out of their trades, and then move up higher. This, my voice just got real loud all of a sudden. This is a break of market structure. That is a bullish break of market structure. Why are we seeing a bullish break of market structure in uh, a retracement to a bearish impulse? Because this may be signaling that prices are going to go higher after a retracement. All right. What you want to do in your mind is to say, okay, we have price traded through and closed above that high. That means it's not a liquidity grab. It is an intent. All right. We have the bearish move and then the stronger buy up. All right. We have the bearish sell off and then the stronger buy up. That creates this area of fair value. All right. And we wait for the market to come back to that area of fair value before we start to think about buys. We have entered that, we are entering that area of fair value where we expect price to do this. That's all. All right, and that happens on every time frame. That happens on every. It's the fractal nature of the market. All right. Now, where do I expect price to pull back to and then turn around? Well, I'm looking at clues like fair value gaps. All right. This imbalance here is a great area to look at. And if I use my Fibonacci retracement tool from the low to the high, that's in the area right at the 50%, the equilibrium, the EQ. All right. And just below that is these sell to buy wicks here. This is an area that I'm looking for price to turn around. If we wick down into that area, I'm looking for a high probability trade. But that's going to be a long while before that happens, folks. Let me tell you that right now. This is the monthly time frame. Let's go down to the weekly. All right. In the weekly, what do we see? We see that hard. Sorry. Oh man, come on. We see that we see the hard break of market structure here. That tells us we are bullish. All right. Even though the monthly shows that structurally, technically, we are bearish. All right. But on the weekly, what are we? All right. What we see is price came down, stole the liquidity down here. All right. Uh, as we saw on the monthly time frame, took that liquidity and then pushed higher, breaking this high, trading above this high. We see that impulsive move a few weeks ago here. This is the weekly time frame, right? And you see that we are overcoming that push. This, if we wait patiently, will become the CISD, the change in the state of delivery, in my opinion. And if price closes past that low, when price closes past this low, we can look for price to go lower and aim towards that low. Now, what did I say we were looking for on the monthly? I said we were waiting for price. We'd be waiting for price to hit a bullish fair value gap here, right? And we have these buy to sell wicks here, which are going to show um, the area of demand. Okay, the area of demand. All right, and the way I like to look at it is this low here can be an inducement for people to for price to push down to that liquidity low right above an area of demand, to look for price to take that liquidity low as a draw on liquidity, and we can take it down to the demand area, and we can see a higher probability trade to the upside, and that would happen right around that 50% area of this trading range. You understand? All right, right below it. That's what we're trying to get to. All right, the what do you call it? The discount range of this trading range. This is discount. This is premium. We want to take our longs from discount. We want to take our shorts from premium. All right. ICT is a genius. All right. Let's move. All right. We're at the daily. What do we see? What do we see? We see that low that I tell you that I'm watching to see if it turns into a CISD. I'm watching that low. And it just so happens to be a liquidity low. All right. Because you can see that price did come down and sweep for liquidity, right? But look at the reaction to it. Look at the reaction to it. It came up here. Why did it stop here and then start coming down for the Thursday and Friday? Because there's an imbalance candle here that's acting as supply. I like to see these. Some people don't catch these as an area of supply where price will turn around. Look at that engulfing camera, that engulfing candle that engulfed the previous day's candle. All right, this was Wednesday. This is Thursday, Friday. It turned around right there. All right, what you don't see is any bullish fair value gaps down here. You don't see a bullish PD array down here that will turn price back around. What you see is momentum candles that have a lot of intent to move downwards. That's why I like the bearish scenario here, coming from this area of supply. I'm looking for price to take this low here as a draw on liquidity. All right, because it's near these relative equal lows. All right, and where are we coming to? Right here, where I see an untested area where this might be the CISD, where price changed. You see how price moved up here, then gapped down here, gapped down, pushed up, then finished this bearish leg. And then we see the turnaround. We see price trying to get past it, and then we bust through, and it was never retested. If price gets down past this low, I think we're going to test this area here at 1.3298. Okay, I think that's where price will be coming from. Now, what I want you to watch, what I want you to watch for. Get out of here. This is all right. You're driving me crazy. All right. What I want you to watch for is how does price get from here down here. I want you to see if price creates a bearish fair value gap that it could use for lower prices. Now, I want you to bear something in mind too. We have FOMC. We have the NFP right after that, 2 days after that. NFP on Friday, but FOMC on Wednesday. These are the high impact news items that we want to watch for. Now, I want to show you something. If we go down to the 4 hour, having said all of that we saw on the daily, there's you can say it's uh, technically bullish because we broke this high. All right, that is a market structure shift. All right, if we go back to the daily, just take a peek at that, we can see that once we got past that, we moved pretty well up into this area of supply. Price comes back down, and we're looking to see if it creates a fair value gap on the way down. If we look at it on a smaller time frame, I am bearish on the 4 hour. Why? Market structure shift to the downside here. Market structure shift to the downside here. We're not just sweeping these lows, we are trading through them, and we are creating bearish fair value gaps right here. Do you hear the passion in my voice? And we got another one here. All right, price could use these things. Why would I be looking for Why would I be looking for buys? Because we have headwinds right here. All right, we have headwinds right here that could turn price back down at any point. All right, if we run through them, that's when I would be interested in buys again. When we trade past and close above these bullish fair value gaps, and if we create bullish fair value gaps along the way, then we can hit those and go up higher. But until that happens, I am bearish on the 4 hour and on the short term, and I'm looking at these lows as the draw to liquidity. All right, to draw on liquidity, and I'm looking for price to sweep. That's why I have this this target here, and I think the next target would be down here at, like I mentioned earlier, 1.3299. Really 1.33. Uh, just look at that. All right, just look at that, and you tell me what you think. I think we're heading down. All right, the intent seems pretty obvious to me. Are we kept coming down to this low? I don't think so. I think we're going to come up here because this is untested, and I think there's some support here. All right, at 1.33. All right, so let me know what you think in the comment section. Make sure you hit the boost button, and I want to hear from you. If you have some analysis that you think is a little strong or whatever, drop it in the comment section. I would love to make a comment on it or take a look at it and consider it. All right, I'll see you in the next video, and thank you for watching.